Hello everyone, my name is Esmeralda Munguia, and today I'm going to talk about Luckin Coffee, its background, the timeline leading up to the fraud, and the fraud consequences. Luckin Coffee Inc. is a Chinese coffee company. It was founded in Beijing in October of 2017 by Lu and Jenny. June 2018, Luckin raised $200 million from investors, which valued the startup at $1 billion. Investors included Singapore wealth fund GIC, Centurium Capital, and Joy Capital. November of 2018, they raised another $200 million in its second funding round, which increased the company's valuation to $2.2 billion. April 2019, Luckin raised $150 million in a pre-IPO funding round from investors, including BlackRock Inc., which valued the company at $2.9 billion. By May 2019, the U.S. initial public offering was $17 per share and raised $645 million. This was the second biggest U.S. IPO by a Chinese firm in 2019. December 2019, Luckin overtook Starbucks as China's biggest coffee chain by the number of stores. It had over 4,500 stores, topping Starbucks, which had 4,100. January of 2020, Luckin expanded into vending machines to sell freshly brewed hot beverages and snacks, seeking even more of the China market. Luckin didn't even have cashiers. Customers needed to place their orders and pay on their app. On January 31st, 2020, Muddy Waters tweeted a link to an anonymous 89-page report that alleged that Luckin Company was a fraud. Additionally, the report stated that in the third quarter of 2019, revenue was inflated by 88%. The report also stated that Luckin inflated their sales to raise money from investors. Muddy Waters Research LLC is an American due diligence investment firm that conducts investigative research on public companies. They're also well known for going after Chinese entities listed in the U.S. Unfortunately, China government is relaxed when it comes to regulating their company's accounting standards. In mid-2020, President Trump hinted that Chinese companies need to abide by anti-fraud regulations, such as Sarbanes-Oxley Act, or should not be allowed to list on the American exchange. As of today, the Securities and Exchange Commission adopted amendments to finalize rules to implement the Holding Foreign Companies Accountable Act, HFCAA. The law was passed in 2020 after Chinese regulators repeatedly denied requests from the Public Company Accounting Oversight Board, PCAOB, which was created in 2002 to oversee the audits of public companies. 2 months later, on April 2nd of 2020, Luckin said that an internal investigation has shown its chief operating officer, Jian Liu, and other employees fabricated sales. Its shares fell as much as 81% in New York on April 2nd, wiping $5 billion of its market. By November 2020, Luckin Coffee filed for bankruptcy, Chapter 15, in an attempt to protect itself from U.S. creditors. On December 16 of 2020, the Securities and Exchange Commission charged Luckin Coffee Inc. with defrauding investors by materially misstating the company's revenue, expenses, and net operating loss in an effort to falsely appear to achieve rapid growth and increase profitability. Luckin, whose American depository shares trade on NASDAQ until July 13 of 2020, has agreed to pay a $180 million in penalties. The complaint further alleges that the company intentionally and materially overstated its reported revenue and expenses, and materially understated its net loss in its financial statements in 2019. For example, Luckin allegedly materially overstated its reported revenue by approximately 28% for the period ending June 30th of 2019, and by 45% for the period ending September 30th of 2019 in its publicly disclosed financial statements. The complaint alleges that during the period of the fraud, they raised more than $864 million from debt and equity investors. After the misconduct was discovered in the course of the annual external audit of the company's financial statements, they reported the matter and cooperated with SCE's staff. They also initiated an internal investigation, terminated certain employees, and added internal accounting controls. The SEC's complaint filed in the Southern District of New York charges Luckin with violating the anti-fraud reporting, books and records, and internal control provisions of the federal security laws. Without admitting or denying the allegations, Luckin has agreed to a settlement, subject to court approval, that includes permanent injunctions and the payment of $180 million in penalties. I'm assuming the $180 million would be to pay back investors. Notice how I mentioned subject to court approval. Yes, the Chinese government has to approve the $100 million and penalties. What happened to Luckin Coffee? Well, they're still making a comeback. Yes, you heard me right. They're still in business as of today. It now has 6,580 stores in mainland China. That's more than Starbucks, which has just over 5,650 outlets in China. Luckin Coffee now calls itself the country's largest coffee chain. Some of its stores are self-operated while others are run by partners. Unlike Starbucks outlets in China, are entirely company-owned.